This morning, stocks open higher than they have in weeks, thanks in part to strong corporate earnings. The market recovered much of the ground lost during this month's plunge. The Dow ended yesterday back above 17,000. A new survey from Wall Street powerhouse BlackRock finds more than half of American investors are positive about their financial future. But the high cost of living, state of the economy, and paying for health care remain a big concern. BlackRock polled more than 27,000 people for their Global Investor Pulse survey. Rob Kapito is president of BlackRock and joins us now. Rob, good morning.
Good morning.
So what was one of the most significant findings?
Well, it's really interesting to be able to go out and to find out what investors are thinking and just what the public is thinking. The most interesting thing that we found out is that people have not saved enough for retirement. And they're really quite worried about that. And what we also found out is those that are trying to do something about it are doing the wrong thing. So it was a fascinating survey for us. We found that most people, most households, are sitting in cash. And you report on interest rates all the time. We know that they're very low. And cash is just the wrong thing to be doing if you're planning for retirement.
Cash is king, though, Rob Kapito. We hear cash is king.
That's a very good line, but retirement people should be looking to invest today because you can't invest for the future in the future.
I love that.
And
That's
we
your
also
slogan.
found, it's great. And for us, we think it's about convincing investors that it's not timing the market, it's time in the market. And today, we have a very serious situation in this country where people are not saving enough. And we were able to get information broken down by age group. And it's fascinating.
And on that issue of age group, millennials are the most confident about their financial future. 66% believe it will be a bright versus only 45% of baby boomers. I found this hard to believe. I don't know any millennials, I mean, honestly, who are hopeful about their financial future.
And the millennial age range is 25 to 34.
They're not making a lot of money. They're strapped, you know, housing costs, etc. They don't feel like they're getting ahead.
Well, there's really two primary reasons. One is they didn't really have a lot of assets when they went through the financial crisis. They're younger, and they have a lot more time to worry about these issues. Whereas there's a squeeze between the baby boomers and Generation X because they had the expenses, they did lose some money in the financial crisis, and they're closer to retirement. Now, the one thing that you have to think about is that people are living longer. You know, in the 1950s, people lived till 68.
60-something,
Now, today, you're going to live till 80. When did living longer become a problem? So just think about this, that you used to spend about 14 years in retirement. Today, you're going to spend 20 to 25 years in retirement. So you better think about saving today for the future. And that's what the message is. And it was borne out by this survey.
There is still this big split, though, because you talk about how many people are uncomfortable, not ready for retirement. The market is rolling.
Well, let's talk about the market. People are not invested in the market. So only 18% of households are actually invested in the market, and they're scared because they see these gyrations. We want to send a message that that is just noise. You have to invest for the long term. This short-termism is not going to help you to retire. And cash is the worst thing, especially when you're not getting paid on this particular on cash.
And there's a difference between women and men.
It's really also interesting in the survey between women and men. Women are saving less than men. And this is a big problem. Why is that? Because women are closer to the household finances. They understand that expenses are high, and they'd rather spend the money on their children today than save for their own retirement.
So this is
the number one crisis in America.
I know,
Rob. And if you don't save, by the way, your parents are moving back in with you at some point. So that should cause you to save as well.
Thank you, Rob.